Welcome back. I'm Pratap here. Today is the 23rd July 2024 and today is also a budget day, and let us analyze the performance of high liquidity zones during the budget day. So it is a special day, and first let us identify the high liquidity zones identified from yesterday's report. So before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So from our channel, click on this community tab, then you will get into this post. And this post is having a YouTube link that will take you to all the training lessons. Just click on this link, then you will get into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So you please join in the Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important update. We will provide at our Telegram channel. And yesterday end of the day, we identified high liquidity zones from daily and 75 minutes time frame. So these are the stocks near daily demand zone. Here we don't have any daily high liquidity zone. And these are the stocks from daily supply zone. And here also we don't have any high liquidity supply zones from this list. That means there are no high liquidity demands and supply zones on daily time frame. When it comes to the 75 minutes time frame, these are the stocks near 75 minutes demand zone. And here also we don't have any high liquidity demand zones from this list. And the next one is stocks near 75 minutes supply zone. Here we have few stocks are available, and also one interesting stock, let me tell you. This is not a valid high liquidity zone because it is already pierced. So this is BHL is a valid, it is a fresh zone, that is one thing. And BHL is also having a high liquidity demand zone. That means we get an opportunity to trade in either of these zones. So please note this point. And the next one, we have identified one more high liquidity zone, CUB, Citibank Union. And also we have one more stock, GMR Infra. So these are the three high liquidity zones we identified. So BHL, CUB and GMR Infra. First let us look into BHL. This is a 75 minutes high liquidity zone. We have leg-in candle as a drop, 3 base candles and again a drop candle. This is how we identified the zone. And also it is having a high liquidity demand zone also. We have a drop, 3 base candles and rally. Because both these zones are near by near, we have higher chances of getting opportunity even in the demand zone also. So that means in this stock we can look for both long opportunities as well as short opportunities. How we fine tune, let me show you in the 15 minutes time frame. In 15 minutes time frame, we have a drop, 3 base candles and again a drop candle with hidden body. And here again we have a rally, base rally. This is the 15 minutes demand zone. And when it comes to 5 minutes time frame, here we have a fine-tuned 5-minute zone. We have a rally, 3 base candles and a drop candle. After that there is a follow-through candle here. This is the fine-tuned 5-minute zone. And also here we have a fine-tuned demand 5 minutes demand zone also. You can consider this is a leg candle, 2 base candles rally. In case if you are not convinced, if you feel this is a tinny candle, still we can identify this is a rally candle, this is a failed ERC candle, and we have 1, 2, 3, 4 base candles rally. This is a rally. This is a, see, either way we have, still you can consider this is a rally candle, 1, 2, 3, 4, 5, 6 candles. Either one is okay. But this is how we fine tune. And let us see what happened to the market. So morning opened here at 9:15 and prices came down, and here it gave a trade entry. We got an entry. And what about the target? Till 5 minutes, 15 minutes supply zone. The immediately available 15 minutes supply zone, this is the one. We have a lagging candle, base candle and a drop candle. This is a valid 15 minute zone. So we got a 5 minutes trade here at 5 minute zone. We got the entry at 9:45 candle, and it reached the target at 11 o'clock candle. These are the 15 minutes. If you want to know exactly in the 5 minutes time frame, this is the candle, 9:45 5 minutes candle, and then 11:10 5 minutes candle, it reached the target. So this is the way the long trade completed, and BHL has given a profit 15,618 rupees profit, which is 6% ROI as per one futures margin cost. Okay, after that, this trade is completed. Let me delete this. And now we got a short trade, because here we have a supply zone, fine tuned 5 minute zone. So from the high liquidity supply zone, we got a trade. After that, the zone is violated. That means stopped out. Our trade is stopped out. Which trade? Short trade is stopped out. Long trade is successful, and short trade is stopped out. And this is the way BHL has given a loss. Stop loss is 1,444 rupees, which is a 0.6% negative ROI. Still, if you balance both, what to say, both the trades, if you consider both the trades, still you might be getting a profit close to a little over 15,000, about 15,200, something like that, or 150. Sorry, 14,000. 1,150 rupees profit you may get if you, by considering both long and short trades from BHL. So this is about BHL. Next one is CUB, City Union Bank. This is a 75 minutes zone. We have a drop, 3 base candles and a drop. This I fine tuned with 15 minutes time frame. Here we have a rally, 1, 2, 3, 4, 5 base candles and a drop candle. This is the 15 minute zone. Inside the 15 minutes, again we fine tuned with 5 minutes time frame. We have identified 2 5 minute zones here. We have a drop, 1, 2, 3, 4 base candles, and again a drop candle, but it is already tested. After that, prices came down. So that's why we can't consider this zone, because this is not a valid, it is not, it is not a fresh zone. It may work second time if it is a high liquidity, but time being we doesn't know it is a high liquidity unless we verify with the NeoStock software. Okay, next another one is a drop base drop. This is a fresh zone. There is a rejection from this zone. The next candle still we can consider, but anyway prices did not entered into the zone, so we did not get a trade from this zone. So there is no trade from this zone. The next one is GMR Infra. GMR Infra is again another 75 minutes high liquidity supply zone. So this is the zone, drop, 3 base candles and again a drop candle. This is the high liquidity zone, but this 75 minutes high liquidity zone is originated from this 5 minutes zone. There is a 5 minute zone. Let me show you the 5 minute zone. We have a 5 minute zone. We have a rally, base, drop. After that it picked up the orders, came down, and after that again a zone is created in this somewhere here. The 75 minutes leg out candle is our base candles are picked up the orders, and then it came down. So that means this 5-minute zone is acting as a horizon for this entire 75-minute zone. And moreover, this 5-minute zone is created before the formation of this 75-minute zone itself. So that's why this is the horizon. This is what we learned in lesson 22. In lesson 22, I already explained this new strategy. The lower time frame zone as an horizon to the higher time frame zone. So this 5-minute zone is the horizon to this entire 75-minute zone. That way we can plan a trade. But are there any fine-tuned zones? For that also you need to look. So first of all, this is a 75-minute zone. This 75-minute zone, this is the drop candle. These three are base candles, and again a drop candle, drop base drop is originated from this 5-minute zone. That means there is a strong order flow in this 5-minute zone. That is what I explained in lesson 22. So it is a very good example for what I explained in lesson 22. So this 75-minute zone is having a 15-minute zone here. We have a rally base drop. So here 15-minute zone is also taken orders from this 5-minute zone. If it is somewhere in the middle, I would have drawn the zone, but it is at the originated area. So I did not fine tune, because anyway, even if you fine tune, we need to take a trade from here. You can also take a trade from the fine tuned area, but your risk will increase. So that's why you should be very careful. Risk management point of view, you may take a trade here, but stop loss is going to be from the horizon only. Okay, next 5 minutes in the same area, 5-minute zone is also there. Here we have a rally, 3 base candle, this is a drop candle, after that follow through candle. That way you can draw a zone in this area. But if you take a entry, stop loss is here, risk will be very, very high. So this is the reason why taking the orders from this area is very, very important. And where you place the order, exactly here or somewhere inside, that is all depending on your risk management. But definitely you got a trade. In which candle you got the trade? At 12 o'clock, 10 minutes candle we got the trade. What about the target? The immediately available 15-minute zone. Let me go to the 15 minutes time frame. So here you have a 15-minute zone. Rally, base, rally, and also multiple times it is trying to pick up the orders from this area. But this time it is violated, but you need to exit here only. So let me go to the 5 minutes time frame. Here we got the entry, and finally you will be exited in this area. If anybody would have used 1 minute trailing stop loss, maybe you might have got more profit. But anyway, this itself is a very good margin, profit margin. So at 12 o'clock 10 minutes candle you got the entry, and the exit 12 o'clock 25 minutes candle. That means in 15 minutes our trade is completed. So how much profit we got in 15 minutes? 42,750 rupees is the profit in just 15 minutes. What is ROI? 11.5% is the ROI as per one future margin cost. Why so much profit? Because of this budget, there will be a lot of volatility will be there. But the risk is there are higher chances of violation also will happen today. But high liquidity zones worked very well. That is most important. Because our high liquidity zones are having 80% success rate, more than 80% success rate. We already seen previously in the elections results day, we got good profits. Today in the budget day also, we got the profits. That is the power of the high liquidity zones. So 42,750 could have been your profit. It could be even more if you would have used 1 minute trailing stop loss. But okay, this itself is very, very good enough. But the strategy is our 5 minute zone as an horizon for the 75 minutes high liquidity zone. The concept what you learned in lesson 22 in the recent time. So these are the 3 high liquidity zones. And out of these 3, we got 2 trades and 1 stopped out. Something I want to tell you, I think I struck up some point is. Okay, anyway. So this is about the high liquidity zone analysis on today. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.